Joining us with his perspective, Dennis Lockhart, one of our regular guests and former president and CEO of the Federal Reserve Bank of Atlanta. Dennis, always great to see you. Thanks for the time.
Thank you, John. Good to be with you.
What is your expert analysis of the message from the Fed yesterday?
Well, I thought what was most interesting is how Jay Powell and the committee overall is looking at the disappointing inflation data in the first quarter. And he sort of walked a tightrope. He said, we're not going to dismiss it, but we're not going to overreact to that data. And we still see the basic narrative of the policy path playing out, which is probably 3 rate cuts in 2024. And he would not be pinned down, of course, as to when that first cut would take place.
And I guess most of the conversation over these last few months, you can tell me if you feel differently, has been at what point for a central bank, whether it's the Fed, whether it's the Bank of Canada or beyond, at what point is the risk of economic weakness due to higher interest rates something that outweighs the risks from inflation? I mean, if we're looking for where that line in the sand is, do we know right now?
No, we don't. I don't think we know. This is the kind of issue in which first they will feel their way into a decision in some respects. And the committee will discuss it very thoroughly with a lot of different perspectives expressed, I'm sure, at the committee table. And then it becomes a judgment call of the consensus of the committee that the time is right for the first rate cut. And from that, of course, they will be signaling that they're not prepared to go further with the current stance of policy for fear that it could precipitate a downturn that's unnecessary.
And then I guess the other part of this story, Dennis, is that for those who are predicting Armageddon for the economy as a result of higher interest rates, that has not materialized. We can nitpick on what's happening in, say, Canada versus the United States. But I was asking the question yesterday, do we need to reframe the question full stop? Are we in an environment where getting back to preferred levels of inflation is tricky because it's been sticky, but it's also an environment where consumers, businesses are showing some resilience to higher interest rates. It's our new normal because, like in the stock market right now, things seem pretty rosy, even though there isn't an expectation we're going to see a whole bunch of interest rate cuts over the next, call it, 8 months.
Well, you know, central bankers are born to worry, so they're always going to worry about a recession and worry about making a policy error. But the current environment has factors at work that I think are really quite positive, and that is in the United States labor market, there seems to be continuing demand for labor. So we have low unemployment, and most people who are entering the workforce are going to be able to find a job. That gives confidence to the consumer. The confidence being that their income streams are going to continue and they can find a job if they lose their job. So that creates a willingness to consume, and you have a kind of virtuous cycle at work. I think some of that is at play in the United States, and that suggests that if the Fed handles its policy moves correctly, we can continue this expansion and continue the low unemployment rate. Like
one strategist was saying, Bloomberg was quoting that this idea of a Goldilocks scenario is playing out. Would you be willing to describe it that way?
So far, yes. Although I would say if you remember the term immaculate disinflation. Well, the disinflation went sideways with the last 2 inflation reports, and then the producer price index also was discouraging because it actually ticked up. So maybe the disinflation story is getting sticky. Maybe it's not it's going to be so easy to get down to 2% from current levels. But up until now, no recession, and the immaculate disinflation story has actually been the real story. So we'll see if that continues. The circumstances may be changing. It's hard to tell.